Hello, fellow investors. I'm Ben, and this is GVD Investing, where I break down the latest stock market news, analyze stocks, and share my personal investment journey in hopes of making us all better investors.
In this video, we'll take a look at one of my favorite stocks, DraftKings, and some recent exciting news that could have a big impact on the stock going forward. Ark Invest just bought a bunch of shares, so I'll go over what they're doing and why I think they decided to add DraftKings to one of their ETFs. Should you be adding DraftKings to your portfolio? Let's find out. So, most of you probably already know what DraftKings does, but for those who don't, I'll just give you a quick overview of the company. DraftKings is a digital sports entertainment and gaming company created to fuel the competitive spirit of sports fans with products that range across daily fantasy, regulated gaming, and digital media. DraftKings is the only US-based vertically integrated sports betting operator and is a multi-channel provider of sports betting and gaming technologies, powering sports and gaming entertainment for more than 50 operators in 17 countries. DraftKings offers three main products: daily fantasy sports, which allows users to enter daily and weekly fantasy sports related contests and win money based on individual player performances in five major American sports: the MLB, the NHL, the NFL, the NBA, and the PGA Tour, Premier League and UEFA Champions League soccer, NASCAR auto racing, Canadian Football League, the XFL, mixed martial arts, and tennis. Their sportsbook, which is their betting platform, and casino, that offers a ton of various online casino and video games. Now that we have taken a look at DraftKings, the business, let's hop on over and see how the stock has been performing over the last 6 months. So I actually opened a position in DraftKings in early September of 2020, right around here, around $41, and it's been quite a crazy ride for the stock since early August anyway. The stock absolutely took off, jumped over 100% from early August to early October, went up almost 100%, and then fell drastically, giving back most of those gains, fell 45%, and I was actually down on my position. I got in at $41 or so, and it fell to $35. But since then, it's been pretty good for DraftKings. They've gone from $35 back up to around 54 where they're at now. They had a pretty good dip from the end of middle December to the beginning of January. It fell another 20%. Over the last few weeks, though, things have really started to turn around for the company since most of the sports have come back. NBA, NHL, and football's in the playoffs. So since January 4th, the stock's rebounded about 21% due to a bunch of recent good news. And this actually leads me to my next point, which is Ark Invest buying a bunch of shares in the company. In early 2021, there are two things you can hope to happen to one of your stocks: a short squeeze, orchestrated by the masterminds over at Wall Street Bets, or Ark Invest buying shares of a company you own. Either one of these catalysts can launch a stock you own on its way to the moon. When Ark Invest starts investing in a company, people pay attention. That is why I was extremely happy when I checked my email and got Ark's daily trade report that showed they purchased just over 620,000 shares, or approximately $33 million of DraftKings stock, adding it to their Ark W, or Next Generation Internet ETF. This seems to already be having an effect on the stock, as it's up over 8% in pre-market trading. So, now we need to figure out why Ark is buying DraftKings stock. If we take a look at some recent news, I think there are a few reasons that explain them adding it to their Ark W ETF. The first reason: currently, DraftKings gambling and sports betting apps have only been available for download in the US using Apple's App Store, but not on Google or Android products. However, Reuters discovered and revealed changes made to Google's policies back on January 20th. Those policy changes will enable companies to place gambling apps, including sports betting apps, on the Google Play Store available to US users. DraftKings is preparing to pounce on this opportunity, according to a report by 9 to 5 Google. Up until this point, DraftKings' sportsbook and casino app has not been available through Google Play, though it has been through Apple's App Store, among other channels. However, on March 1st, Google says companies in Australia, Belgium, Canada, Colombia, Denmark, Finland, Germany, Japan, Mexico, New Zealand, Norway, Romania, Spain, Sweden, and the United States can also list betting apps on Google Play. DraftKings says it will have its app listed and available on Google Play immediately after the rule change is implemented. DraftKings has continued to expand the availability of its sports betting services as legalization continues its march across the country. The company added its 12th state this week with its launch in Virginia. The company is also drawing strong bullish ratings from some analysts who believe it still has plenty of upside as more states approve its style of gambling. Fantasy sports operator DraftKings has seen strong gains as the popularity of online sports betting rises quickly across America. Financial analysis firm Bernstein underscored that fact with its first ever coverage of the company. Bernstein gave DraftKings a price target of $71 per share, more than 31% higher than its stock price at the start of trading today, along with an outperform rating. The accompanying research note makes predictions about both the future of DraftKings specifically and digital sports betting in the United States in general. The firm forecasts a $25 billion market by 2025 and a $30 billion market by 2030, at which point it expects 85% of the country's population to have access to legal online sportsbooks. And Bernstein isn't the only analysis firm that is bullish on DraftKings, with price predictions above where it is now. The average price target from 24 analysts is $61.63, with a high target of $100. The stock also carries a 2.2 buy rating on Yahoo Finance. So, what is leading to the recent increase in price targets from analysts and the stock purchase by Ark Invest? I think I found the answer. If we take a look at an article from the Wall Street Reporter on January 27th, the same day Bernstein raised their price target, Wall Street Reporter wrote, "Playing to win. CEOs of DraftKings, Fans Unite, ESC, and Activision Blizzard embracing trillion-dollar millennials' demand for esports and igaming. Millennials and Gen Z now have $2.5 trillion in spending power, replacing baby boomers as the dominant consumer force. The global video gaming industry took in an estimated $180 billion in 2020, more than sports and movies worldwide. The new generation prefers interactive forms of entertainment such as video games and online betting on sports, and esports and igaming." DraftKings CEO Jason Robbins was quoted saying, "Esports betting will be one of the biggest categories. We significantly expanded our esports offering and have seen exponential growth in this category. We added popular Madden simulated games and began to include streaming sports within our app, which has become a very popular feature. In fact, since the return of the NHL, the NBA, and Major League Baseball, users have continued to engage with esports, which gives us confidence in that product's future. We believe esports is going to be a huge category. It's when, not if. We believe ultimately esports betting will be, if not the biggest, certainly one of the biggest categories of sports betting over the long term." The meteoric rise of esports and igaming gives DraftKings a massive total addressable market of $40 billion just in the US. DraftKings predict their market opportunity to bring in 2.3 to 3.5 billion in online sports betting revenue, with another potential 600 million to 1.2 billion from iGaming. Keep in mind, this doesn't factor in their global exposure or the fact more and more states continue to legalize online sports betting. 19 states have now legalized, with 9 more states potentially coming on board in the near future. Which leads us to my last point, explaining the recent bullish sentiment around DraftKings, their market share. They are currently the preferred platform for daily fantasy sports and online sportsbook, with roughly a 30% share of each category. They are also the highest rated DFS and sportsbook app on the Apple App Store, with the highest average minutes per session, beating out other behemoths like FanDuel, ESPN, Yahoo, CBS Sports, Barstool Sports, and Bleacher Report. With the upcoming app listing on the Google Play Store in so many countries, the rapid rise of esports and iGaming, and the increased legalization of online sports betting across the US, the sky is the limit for DraftKings. So, should you be buying? Here's what I'm doing. I already have a fairly sizable position in DraftKings, as it's one of my biggest holdings, with a cost basis of $45.99, so I won't be in a rush to add much to my position until the hype dies down a bit or there's a bit of a pullback. I will continue to dollar cost average slowly even if there isn't much of a dip, but I won't be buying at 52-week highs. DraftKings stock is somewhat volatile and seems to offer good buying opportunities if you're patient. The valuation is a bit rich at the moment, with a price to sales ratio around 55 at the current stock price. So I would aim to pick up shares well under 55, but ideally under $50 in the low to mid $40 range. If you're opening a position now, I would suggest dollar cost averaging in slowly, as the stock is definitely not a deal at these prices. But hey, I'm not a financial advisor, so if you want to buy when it's nearing all-time highs, feel free to do so. Are you buying DraftKings stock? How long have you been holding? I would love to know. So drop a comment in the comment section below. So I think that's a wrap, ladies and gents. If you made it this far, thank you so much for sticking with me this whole time. Please tickle that like button. And if you want to follow the journey and be notified of future videos, please smush that subscribe button. Thank you very much. Until next time, be safe, wear a mask, and invest wisely.